Every year, a lot of self-employed Canadians hand CRA more money than they actually owe, not because they cheated, but because they just didn't know what they could claim. Today, we're going through the full list. By the end of this, you'll have clear list what qualifies, what CRA expects you to track, and exactly where people go wrong. Just a quick note before we get into it. This video is for education only, not tax advice. For your specific situation, always talk with qualified tax professional. Before the list, let's look for definition of a business expense. A business expense is anything you spend in order to earn income. If it helps you to earn money, CRA generally lets you deduct it. Here's the way to think about it. CRA is taxing your profit, not your revenue. So every dollar you expense is a dollar that never gets taxed. The catch is you have to track it, document it, and be able to prove it was for business and not personal use. That line is where most people get into trouble, and we'll come back to it. Alright, here's the full list. Number 1. Home office. If you work from home and have a dedicated workspace, you can deduct a proportional share of your rent or mortgage interest, your utilities, internet, property taxes, and maintenance. The formula is simple. What percentage is your home used exclusively for work? If your office take up 10% of your square footage, you claim 10% of those. CRA does require the space to be used regularly and exclusively for business. Number 2. Phone and internet. You can claim 100% unless your phone is used 100% for business, and CRA knows that's rarely true. Estimate your honest business use percentage and claim that, and keep your bills. Number 3. Meals and entertainment. Client dinners, business coffees, team lunches, 50% deductible. CRA assumes there's always personal benefit when food is involved, so they split it. Always note who you met and why on the receipts. Number 4. Online tools and subscription. Your Google subscription, Canva, Zoom, Adobe. If you use it to run your business, it is deductible. Number 5. Advertising and marketing. Your website, you're running Facebook and Google's ads, all deductible. All costs directly tied to promoting your business counts. Number 6. Vehicle expenses. If you use your personal vehicle for business, you can deduct proportional share of gas, insurance, repairs, lease payments, and depreciation. The keyword is proportional. You need a mileage log. CRA will ask for it. Note the date, the destination, the purpose of every business trip. And if you drive a higher end car, there's a ceiling on how much depreciation you can deduct. Number 7. Hiring a family member. Paying your spouse or adult child to do real work for your business like bookkeeping, admin, social media. It is a legitimate business deduction, as long as the pay is reasonable for the work done. It is also a legal way to keep more income within the family, often at a lower tax rate. Number 8. Equipment depreciation. You generally can write off a big purchase like a laptop or a camera all in 1 year. CRA requires you to depreciate it over time using capital cost allowance, or in short, CCA rates. A $2,000 computer under Class 50 gives you roughly $1,100 deduction in year 1. Not as satisfying as full write-off, but it adds up. If this is useful, please hit subscribe. I cover this stuff every week for Canadian freelancer and small business owners. Number 9. Interest on business loans. Interest paid on a loan or line of credit used strictly for business is fully deductible. The moment you mix personal and business use on a loan, it gets complicated. So please keep them separate. Number 10. Bank and financial fees. Monthly account fees, e-transfer, wire fees, credit card fees on your business account, all deductible. Small amounts, but they count. Number 11. Professional fees. Paying an accountant to file your taxes, a lawyer to review a contract, consultant to help grow your business, fully deductible. The cost of figuring out your deduction itself is deductible. Number 12. Commercial insurance premiums. Business liability insurance, E&O coverage, insurance for your equipment, all deductible. If you're paying for it to protect the business, CRA allows it. Number 13. Employee salaries and benefits. If you have staff, their wages, their bonuses, benefits are fully deductible. That includes CPP and EI employer contributions. Number 14. Cost of goods sold. If your business sells a physical product, the cost of producing or buying that inventory is deductible. Raw materials, wholesale purchases, manufacturing costs, all of it. Now, here's the line that matters most. Personal versus business. This is where people accidentally get into trouble. CRA does not guess in your favor. If an expense has personal element in it, like a vacation that was partly a business trip, or a renovation that improved your office, you need to be honest about what percentage was truly business. A simple gut check. If you had to sit across from a CRA auditor and explain every expense on your list, would each one hold up? If yes, claim it. If you're not sure, ask professional before you file, not after. This is exactly where QuickBooks earns its place. Instead of scrambling at tax time, trying to remember what you spent back in January, QuickBooks lets you categorize every expense as it happens. Your receipts, mileage, subscriptions, all of it. By the time tax season comes, your deduction list is already fully built. Before I wrap up, drop a comment below and tell me which deduction on this list that surprised you the most. In summary, a few common mistakes. Number 1. Not keeping the receipts. CRA can go back several years. No proof, no claim. Number 2. Claiming 100% of mixed-use expenses. Be honest with your percentage on your phone or your vehicle or internet. Number 3. Forgetting the smaller deductions like bank fees, insurance, professional fees. They seem minor but they compound. Number 4. Mixing personal and business accounts. A separate business account and credit card makes everything cleaner and much easier to defend. All you need is a clear list and a system to track it. Start with the easy wins like home office, phone, subscription, meals. Build the habit of logging vehicle use and saving receipts. CRA only taxes your profit. The more legitimate expenses you track, the less that profit you hand over. Talk to a tax professional before you file. I hope this video is useful for your business. I will see you on the next video. Bye.